Hey guys, it's that Dividend guy coming at you with another stock market list. Today we're going to look at the Motley Fool in their recent article, two top value stocks to buy right now. So guys, remember value stocks are ones that are beaten down by the market and probably out of favor with the market as well. And that's really important because um, the stock market's at all-time highs right now. And so what that means is a lot of stocks are really overpriced compared to their actual intrinsic value. So what the Motley Fool is doing is finding stocks that you might not think are great investments. Honestly, most of the time value stocks are ones that are out of favor with the market and investors don't like them. That's why they're value stocks, because they're beaten down and a lot of people don't think that they have a very bright future, which is okay. So keep that in mind when we look at these stocks because they're probably going to be ones that are very out of favor with the market. So with the S&P 500 trading at an average price to earnings multiple of 37, stocks right now are generally trading at significantly more expensive ratio than their historical average of 16. So it's double the average right now. So 37, it's crazy. Stocks are really overpriced right now. When that happens, occasionally the market corrections follow. While there's no guarantee of that crash coming, savvy investors might want to take a closer look at rotating or diversifying into some value stocks as a potentially safer option. So, two value stocks to consider at the moment are General Motors, ticker symbol GM, and Philip Morris International, ticker symbol PM. Both are great deals in the electric vehicle and tobacco industries. First, we have GM with plans to go all electric by 2035, which is really late. GM is a serious contender in the rapidly growing electric vehicle industry, and with a forward PE multiple of just 8.8, its stock is drastically cheaper than the current market leader Tesla, which trades at 108 times earnings. So you're getting it way cheaper. Is Tesla overvalued or is GM undervalued? It's hard to say, but what is clear is that with this dirt cheap valuation and comprehensive EV strategy, GM is one of the most compelling ways for investors to bet on this opportunity. Analysts at Metalistic Research expect the EV market to expand at a compound annual growth rate of 36.6% or roughly 2.5 trillion by 2027 because of supportive government policies and improving battery technology. And unlike rival Ford, which focuses on automotive segments where it's already the dominant player, GM has a broader EV strategy that emphasizes the logistics side of the industry. In July, GM announced a partnership with Westinghouse Airbrake Technologies to develop Ultram batteries and hydrogen fuel systems for trains. This move follows the creation of GM's subsidiary BrightDrop, which uses its battery technology to build electric delivery products such as the EV600 van and EP1 moving pallet. GM's Ultim Perform platform, a low-cost lithium battery technology, can be adapted into a wide range of vehicles, and the company has pledged $35 billion to develop at least 30 EVs by 2025. First quarter revenue fell 0.72% year over year, with 32.5 billion amid the ongoing chip shortage affecting the automotive industry. The company generated a net income of 3 billion in the quarter, and management expects a full year profit of between 6.8 billion and 7.6 billion. So, guys, this is one of those really sad stories where GM and Ford are both on the outskirts of their formerly dominated industry. So they weren't ready for the competitive change that Tesla brought to the market, and that's why they're having to work so acceleratingly fast because Tesla's so far ahead. And so, do I think GM is the best play for this? No, I think Tesla obviously is. But it's really hard to argue when you look at the metrics of how cheap this stock is. It also pays a dividend, I believe. I think they reinstated it. I need to check on that. But even if they didn't, the fact that they're looking to expand into the market while keeping their market share of what they already own, they're still producing vehicles every day, right? So they're still getting that generation of that cash flow. I see GM vehicles all over. So that's the one thing that GM and Ford have for a competitive advantage right now is they lead the market, right? But people are realizing that there's more incentives for EV because they're better for the environment. So the government is actually backing these EV companies and more than they are the traditional car manufacturers. And that's another thing that's really hurting them is they're putting in mandates for EV vehicles for all carbon all carbon vehicles to be gone by a certain time. Well, that's putting pressure on the old manufacturers of vehicles because they are the main problem in this. So they're rewarding EV, and by doing that, giving them incentives and stuff and funding, they're kind of pushing GM and Ford out of the pack, and really rewarding the green, the green efficiency of the green initiative. So General Motors a great value right now. If the overall market's average is 16 and it's currently at like what was it 32 or 37, it's at an 8 right now. You're getting it significantly cheaper than the overall market and like 100 times cheaper than Tesla. So I think it's a great value play right now, but it's not where I would put my money for EV. But I hope that it works out for GM. I hope that they get some more market share in the EV market, and I hope that they continue to be profitable and they can move forward with their business. It's not their fault. They dominated the automotive industry for so long. They just weren't ready for a competitor to come in and completely flip it. Tesla's been a disruptor in this segment and in this market. And you can't get mad at these older, stick to your guns auto manufacturers. It's not. I don't think it's going to be a sad story for GE. I just think that they didn't adapt as quickly. But I do believe that they have market share, as in people are driving more General Motors vehicles than they are Teslas because they can't afford Teslas, and so they can't afford a new car in general. So they're just sticking with the old General Motors or Ford cars. So I do think that they have market share, but for how long they're going to have it, I'm not sure. Especially with the green initiatives coming in, I believe in like 2035. So um, they're on the right track, and I do think that they're a safe investment for green energy and the shift towards it because they're going to have to. But Tesla's obviously so far ahead that it's hard to put a lot of confidence in those estimations for General Motors and Ford. But let's take a look at the second value stock, which is Philip Morris International. The tobacco industry is a favorite of defensive investors who prioritize low valuations and consistent cash flow to fund its dividend payout. And Philip Morris International offers both of those perks with its forward PE of 14.7 and a dividend yield of nearly 5%. The company's pivot to reduce risk tobacco products could also boost long-term growth margins. Philip Morris net revenue increased 6% year over year to $7.6 billion in the first quarter, and operating income jumped 23% to $3.4 billion. Most importantly, the percentage of sales coming from the company's IQOS system now stands at 28%, up from 21.7% in the prior year period. That's roughly 22 million units, representing $2.1 billion in sales. It's a tobacco product that releases nicotine by heating instead of burning tobacco, reducing the production of harmful chemicals that the user might ingest. According to the company's research, the FDA has also approved it in the United States, where it sells as a modified risk tobacco product through Philip Morris U.S. partner Altria Group. Philip Morris expects smoke-free products like this to represent 50% of its revenue by 2025, and the transition is already boosting its margins. Philip Morris's gross profit margin increased from 66.4 to 70.3 year over year in the first quarter. Most of that boost came from the higher margin of the IQOS sales, along with manufacturing productivity and higher cigarette prices. Management expects organic net revenue growth in the range of 5% to 7% to roughly 8.1 billion in the full year of 2021. So with these stocks, you are betting on value. The issue with Philip Morris is, of course, regulation. Even with Altria as well, the problem with tobacco isn't the money that they're making. It's the fact that they're so heavily regulated due to the product that they are dependent on for most of their sales. And so what they're doing is they're expanding into different markets. The problem that they're facing is they've tried to have new innovative products in the space like Juul in vaping, and that got slammed as well. And now they're still making money off of that, but it's such a low percentage now. It was supposed to be a high growth prospect, and with all the regulatory things that came in with teenagers smoking and buying it and stuff like that, it really busted down the margin. But they found an alternative with this IQOS, and now that's bringing in really good revenue. 66.4 is an insane profit margin. So they also have investments into cannabis, and I think that will be really where, when the technology comes through to have smokeless cannabis, that's where it's going to really take off. I think once it's legalized, people will not only buy strands from, say, Altria or Philip Morris through Kronos, because that's one of the big companies, but they also can sell a product that makes it healthier to ingest it, or easier to ingest it when it becomes legal. So with these, we are betting on value. They're, again, stocks that the market doesn't like right now. They never like, the stock market never likes tobacco, and General Motors and Ford have been kind of pushed aside in their own fields. But General Motors and Philip Morris are mature companies with relatively modest growth rates. You're not going to get big growth with these companies, and that's okay. But they're transforming their business models by pivoting into new technologies like electronic vehicles and reduced risk tobacco products, which can help boost growth and profits. And with PE multiples for GM of 8.8 and Philip Morris's of 14.7 respectively, both stocks appear to be value conscious. Both stocks appeal to value conscious investors. Guys, these are dirt cheap stocks compared to not only the overall market, but their competitors as well. So these are great options for value-seeking investors. Sure, General Motors isn't the leader in its space anymore, and Philip Morris does have a lot of regulation, but they are cash-printing juggernauts. General Motors still produces a profit. Philip Morris still produces a phenomenal profit. They print money with tobacco. And honestly, if General Motors, like, their what they're looking to do, if they follow through with that, they're going to be printing money too. So both of these companies may be out of favor, but that doesn't mean that they're bad companies, and it doesn't mean that they're not going to be very plentiful to shareholders, in the fact that they both pay dividends, both pay growing dividends. I believe General Motors, I know it did pay a dividend before the pandemic, but I know Philip Morris and Altria are both very shareholder friendly when it comes to dividends. So if you're looking for a value play with consistent dividend growth, Philip Morris is a great option, or Altria. General Motors is also a very good option. Buffett just bought more General Motors. So if you're in the company of the Oracle of Omaha, you know you're doing something right. So take a look at these stocks, and let me know if you guys are interested in either one of them. With that being said, guys, these were two value stocks to buy right now, according to the Motley Fool. Thank you guys so much for watching my channel, That Dividend Guy. Remember to hit the subscribe button and the bell notification so you don't miss any updates. I post portfolio updates Monday through Friday, and I do news videos like this, or stock market list videos like this, just to sprinkle it in there and give you guys 2 videos every single day. So thank you guys so much for watching, and I'll see you guys in the next stock market video. Take care.